Hello and welcome to my morning report analysis videos on Friday the 12th of October with me, Richard Perry, market analyst at Hantec Markets. We've had a bit of a bounce overnight. Finally, we've seen a bit of stability coming through these equity markets. The question will be whether this bounce is actually sustainable. Anything sort of dead cat bounce-ish about it will be a little bit of a concern, considering the fact that we'll be probably selling off again. Now, what has driven this move? Well, we've seen overnight a few things that have played into the markets. We've seen the Chinese trade data, the trade balance, which came in strongly higher on the surplus, and that was driven by exports that were significantly higher than expected. So that seems to have sort of added to a bit of confidence in the Asian session. Asian markets bounced into the close. We've seen S&P 500 futures about 1% higher, although they have been better than that. And the concern, I suppose, with that is the fact that yesterday's sell-off was 2% on top of previous sort of selling days, so it's unwinding very little at the moment, just 1% on that S&P 500, and actually the gains on DAX, for example, this morning were strongly sort of higher, and then now they have dissipated as well. So already questions would be whether this is sort of fading as a rally. Now, what has also been the impact on bond yields? Well, bond yields have stabilised a bit today, with sort of slightly higher on the 10-year. Back to 316. My sort of take on this is the fact that if bond yields can stabilise, then market sentiment, I think, can start to improve again, because obviously we've had this sharp move higher on bond yields and a sharp move back again. So really sharp moves across treasury markets tends to be sort of negative for sentiment. So it'll be interesting to see if we can see bond yields starting to stabilise, and therefore we might see the market sort of sustainably start to stabilise. We have seen the dollar coming under pressure in the last few sessions. That is again sort of stabilised to an extent today. We've seen a little bit of dollar strengthening, nothing too significant across the euro, sterling, and also yen. Basically, a shade of dollar strength across the other majors as well, but nothing too significant. Now, what we also saw yesterday was a huge upside move on gold. Really strong gains on gold yesterday, 12.16. So we've lost $7 of that gain yesterday. $29 up on the day, though. That's a really, really strong day. The biggest up day since June 2016 on gold. But I'll take you through the technical implications of that in a bit. Now, anything else really? Sort of a rebound on oil. Little rebound on oil that we've seen after recent corrective moves. Again, we're still sort of within this big uptrend channel on WTI, so it's still positive on that regard, but it has sort of tested that recent uptrend. But again, you could argue pretty much held on to it. So yeah, the corrective move on oil is just starting to stabilise a touch. Okay, so my any data points today? Yes, we've got the University of Michigan sentiment at 3 o'clock, expected to tick mildly higher to 100.5 from 100.1 last time. That was a downward revision. Also on the lookout for FOMC's Bostic, who is a voter and a mild dove, and he's speaking at 5:30. Now, my chart today is Euro Swissy. Now, seeing as how sort of volatile markets have been recently, this is one chart that isn't that volatile and has sort of been making quiet, serene progress higher in this trend channel. And yesterday, nice strong bull candle, closed above 1450, which completed a base pattern. Now I'll sort of zoom out to see 1450 is a historic pivot from February low, then August high, and breaking out above that yesterday turns the market more positive. It completes a base pattern, and you sort of measure from the left hand. This, on a conservative basis, you'd measure the left hand move. So it's around about 200 pips of recovery. So you'd be certainly back into the realms of the July high within that move. So we've still got this continued improvement in momentum indicators on RSI, stochastics, and MACD. So you're looking to buy into weakness within this channel. That breakout level of support, 1450, becomes sort of a neckline support of the breakout. So any weakness towards that is seen as a buying opportunity. And we are still sort of holding on to the move today. You can see that on the hourly chart where we've got the uptrend in place. You're trading above all the moving averages. Nice strong configuration just on the momentum on the RSI. MACD lines are just crossed lower, stochastics lower. So you could get a little bit of a pullback, as I said. So that's what we're looking out for. Buying into that pullback. Nice support on the hourly chart around sort of 1430 to 1450. Nice support area there. You wouldn't certainly now want to go below 1370 on a corrective move because that would lose the impetus of that rally. But looking good, I think, on Euro Sterling. On Euro Swissy to make further gains. So with that in mind, I wish you good luck in your trading today, and I'll speak to you later.